All right, good evening, guys. Ken at Tortoise Capital. This is the nightly strategy report for September 14th, 2020. So let's get started. All right, so yesterday, Friday, I should say, we tested a new 10-day low at 331.05. And so we had seen that in a matter of 5 or 6 days, it had sold off from the 10-day high, which was at 358.75, and had sold off all the way down to 331.05. And so when we look at that 10-day range, we see that's about 7.8% sell-off. So the 10% sell-off, which was in range today, would have been down here below Z2. The 10% sell-off is still at 322.86, and that's where, it's officially declared a correction, and then down we would go to Z3 and the long-term fair value down around 319. So when you construct an NDX10 or a Williams percent R10, you find the highest high in a Williams percent R that gets recorded as a 0, and then you find the lowest low, and in Williams percent R that's minus 100. And so that price level down there would be at about minus 90 on a Williams percent R, which would put it deep into oversold conditions. And if it's in the top 20% of that range, which would be from anywhere from minus 20 to 0, then it would be overbought. And then you have a 50-yard line here at about minus 50. Well, in a bullish market where price is greater than the 200, and you have a price that gets you down into oversold, the channeling system says you should buy that, because so often that thing will just continue to just rebound and resume the previous long-term bullish move. And that's anywhere from about a 0.65 to a 0.75 reliability, especially when this sell-off is less than 10%, because then that feels just like a normal correction, and now you're getting a chance to buy a quality product on sale. So in the channeling system, you just automatically buy the next day's open with like a 2 ATR stop, and then you just leave that in place until the Williams percent R goes from oversold to above the 50-yard line, and then you exit, because now the opportunity, the unusual opportunity of buying quality on sale is over. So a lot of things fired on Friday on the overreaction and the channeling. So overreaction looks for sharp moves away from the long-term goal. So Friday's sell-off and marginal rebound created a lot of channeling and overreaction swing signals. And anytime you have a system that has 0.65 to 0.75 reliability, then it's something that you should notice. So we identified that over the weekend, and we said, there were 3 possibilities: that you have a big move up, a pullback, and then you could either get a nice rebound back to retest the previous swing high, or you get some kind of grinding move sideways that rejects that upward move and then could actually quiet into a sideways quiet channel eventually. So this is the upside move, this is the sideways quiet channel, or you might just get a rollover and a second leg down. So if the first leg down was minus 7% and then pause, and then the second leg we would expect to be another 7%. So that's like the third possibility. So rebound, sideways chop, or sell-off. So were prepared for any of those moves. And what we got today was the most probable one, which was the rebound from oversold conditions, led by all of the tech leaders. In other words, all of the things that led to these outsized gains on the way up turned out to be the symbols that gave a nice rebound today. So that was one of the three possibilities, and that was one of the three things we were prepared for. So when we're conducting our trade framing, that's basically the scenarios that we want to check. What would we do if the market is up, if it's down, if it's sideways? What kinds of strategies do we want? There we go. Let me erase that so we can study. Come on, damn it. So the price action we then had today was a gap up. It sold off briefly, turned around, reversed strongly up, and then had gave back about 1/3 off the high. So the high of the day briefly got through the Bollinger Band mean at 339.81 and got briefly up here to 340 and some change. The low of the day down here with the baby dragon got as low as 334.36. So what we ended up having was a price range of 334 to 340, so about a 2% range, which is slightly larger than 1 ATR. So it was marginally volatile today. Not anywhere as close to the small ranges that we had back here when the ATR percentage was something like 0.88. This is now up to about 1.88. So the volatility from back here all the way up into here has doubled from 0.88% to 1.88%. But today's range was in line with basically what the new volatility asks for. So it was not an outrageously large move. So tomorrow we'll still be looking at a strong support level here at the low of the day, 334.36. We want that to hold. I want you to notice that the RL10, which had been moving down sharply, started to decay a little bit today. And then tomorrow, if we get an update, that's going to be that new swing low in the RL10, right around 332 and some change. So the RL10 range will go from 335.88 tentatively down to 332.88, which is like minus $23. And that's right around 8% in terms of sell-off. Price closed at 338.46, high of the day 340.5-ish. Bollinger Band mean to the upside there, 339.81. The bottom of the dragon at 338.59. Spine of the dragon has decayed down here to 342 and some change. Z1 and the upper skin of the dragon at 346.96. So this move has to get through that level to really be taken seriously. So that's kind of the next step. Gets through the spine, gets through the upper skin of the dragon. Then the next important target would be this one, which is the peak of the Dragon at 350.39. It's not until that price level that we could really say that this recovery is in place. Now notice that the tomorrow's PSAR is going to be almost basically at that price as well. So the PSAR flipped here and it started to roll over and is sliding down. This is the PSAR value for the future. So this is tomorrow's PSAR. So it's got to get through, call that 351. So if it can get through the Dragon and then through tomorrow's PSAR, then we have a chance to believe in the resumption of this previous strong trend. Until such time as that happens, then this Dragon, which has rolled over and is sloping down, this whole area in here in the orange is going to be considered a noise barrier. So if it rejects here, then the price action will be down. But if it can emerge through the Dragon on the far side, then it has a chance to be a genuine recovery. So this is the Dragon represents for us the range of uncertainty all the way through here. Yeah, so that's that. Let's take a look at what worked today. So the S&P had a strong move up today. It recovered at a 1.31%, which was slightly better than the Dow, which was at 1.26%. The Russell, the aggressive shorter-term index traders, doubled the S&P at 2.62. So that's really a strong indication of short-term trading directionality at 2.62. And then treasuries were basically flat at a minus 0.01. So the treasury owners were not persuaded that today was a rebound. They would still be treating today's price action as a normal noise rebound from dramatically oversold conditions. So that hasn't proven anything yet from as far as the treasury holders would say. They tend to be longer term holders. So the shortest term guys, the small cap index traders plus 2.6, the longer term defensive plays in the treasury is basically flat. And the broad market, again, solid. So in the green, let's take a look at the sectors that outperformed the S&P, and there were many. Finance was slightly better at 1.38. Materials and healthcare, slightly better at 1.44. Silver and emerging markets, about 1.6. Wheat and precious metals, 1.8. And oil exploration, 1.8. Tech, big winner among the XL sector spiders at 2.1. Mexico, 2.4. The FANG companies, that's again Facebook, Apple, Amazon, Netflix, Google, up 2.8. Brazil, 3.25. Clean energy, 4.5. I was listening to some European Goldman Sachs analysts today who are expecting clean energy to be one of the strong leaders for the next couple of years among the industrials, because there is a strong move to encourage national solutions that are green in character. So PBW would benefit from that kind of national focus on rebuilding national infrastructure with clean energy. So PBW continues to be an interesting play in my view for the long run, and it paid off today. Then in the battle of the triple techs, TECL, the broad tech sector, was up 6.3. TQQQ, which is the triple NASDAQ, was up 5.1. So that was leaning more towards a broad tech recovery today. Okay. Let's see. Let's take a look at the companies that outperformed the S&P. So we had, let's see, CRM, which is the Salesforce. That's the new addition there to the Dow. Home Depot and Devon Energy, 1.6-ish. Nucor Steel, 1.7. Wynn Casinos, 2%. U.S. Steel, 2.7. Now some of the tech leaders. Here's Apple at 3%, Boeing at 3.2, Cliff Natural Resources at 4, Virgin Galactic 5%, Simon Property Group 5.7, Nvidia in the chip space 5.8, Nikola, which is shaking off the news reports of them being a fraud, at 11%, and then Tesla, which we talked about this weekend, up 12.5%. So that was a very smooth intraday ride. That had been down 30-some% off its swing high. And we had talked about that attracting some longer term folks who wanted to buy quality on sale. And so that one recovered very nicely today. So a broad base of gains all day today. All right, let's take a look at the sectors that underperformed. Not that many, but there were some. So the S&P up 1.3, diamonds slightly worse, 1.26. So then they have a nice cluster, still in the green, but underperforming, of consumer discretionary, the Bill Ackman Fund at 0.8, energy 0.77, Japan 0.72. Again, treasuries flat for the day. Oil down a third, and then the VIX down 1.65. So quite a lot of interesting names that underperformed both tech and the market today. So this really was a broad index based and not really the tech leaders that were dragging the market northwards. Because take a look at the names that underperformed the S&P today. So you have Microsoft, Walmart, Intel, Goldman, which had been the strongest financial sector, Google, Facebook, even our buddy Caterpillar, which had been the strongest non-tech Dow stock, Twitter, Amazon, and Coke. And nevertheless, the S&P was up 1.3, and you had quite a few other sectors that were pretty good. So the fact that the tech leaders minus those big names did well, and so XLK is up 2%, that's why TECL was so good today compared to the NASDAQ triple. It was 1.33% better. So this looked more like broad index buying and not so much targeted individual companies. So let's see if that holds again tomorrow. All right, so there was one chart posted in the chat room today from Luke. And is he on tonight? Yes. So let's take a look at Luke's work. Thought he did a nice job here today. And here's Luke with some chain trading. Let's see what we can see here. All right. So these are the afternoon trades in Brazil when the market voted up. So trade number one, he's got a pocket retest. So he's getting long on the RLXD breakout. And he's just taken his usual risk down here with the PSAR. He's got the Wu Wei in place until the fireman sees 1, 2, 3, maybe the fourth one the fourth dot. So he moves to no lose plus dinner for two. And so his open risk is about 10 minutes. So a 10-minute period of time in which not really threatened at all of his core capital. Now, by this point, he's ready to lock in gains and probably keeps that in place until the Bollinger Band mean picks up. And that's this line. It came close, but it didn't. And he notices that the second scoop was a rejection of the Bollinger Band mean. And so by that, what he means is that this Bollinger Band mean did not get hit. And so when it fails to fail, so failure to fail further, is a vote up. And so now he buys, it looks like second position here. This was a possibility, but this is a pretty good decision here, because now you've cleared the previous Z2, and you can now see this kind of as a pocket trade. So here's a clear continuation entry, and now he's picked up that Wu Wei exit again, and here he just picks up the Bollinger Band mean. This is probably no lose plus dinner for two, holds that in place, and then is all out here, and brings home 2.1 execution. I just think that's perfectly played. This looks like a short on a supported fall crossing, because it's come through the Bollinger Band mean. He's picking the PSAR stop, gets to no lose plus dinner for two here, follows down, and then takes probably like a 1, 2, 3 exit. Yeah, there it is. Yeah, 1, 2, 3 exit, and makes bank. There was an opportunity here for the stop and reverse. I don't know if you didn't trade that because it was looks like it's getting late in the day. There may have been a fractional move available, so maybe there was another 0.2 possible. But I just think perfectly traded in EWZ. Standard work for a frog champion. And that's what this one, this looks like that move right in here. We're using American time because America. This is that Z3 pinch, and I think the breakout that he gets, and he gets the sweet spot of the big move. This was a little choppy in here. You might have gotten like the swing low, a higher low, and this move. You might have gotten this move, but even so, this is fairly choppy. Hard to get much out of that, but you don't lose much. And then he stays with it, and he gets paid on the one significant move of the day. So that's nicely done. Let's see if we can get Tesla up on the screen here. Come on, don't play these games with me. All right, we're gonna go to the daily report. I don't know what it is about the webinar. It interferes with TC 2000 updating the charts, but that's the only time of day that this ever happens. All right, so let's take a look at the daily charts now. We've already seen the market health check. Oops, here we go. Okay, so we are still in bullish normal conditions, overbought on a long-term basis. We had been approaching oversold, and we actually got oversold on the 3 and the 10 day. But today's nice little rebound brings it back into the above average. So it almost even looks like a buy on dip opportunity right there. You can see the ATR percentage is almost back up to 2%. The risk Z is still giving us a warning of potential adverse volatility spikes to the downside. So it's cautioning us about holding swings overnight. So to me, the swing trading 1 day at a time is still appropriate. I will notice that it has started to bottom out, and so this when it reversed here into the spring, that became a nice swing trade. So this could be the beginning of that next nice swing trade to the upside. I think the approaching election and all that chaos makes this a little bit problematic, and there's going to be some October surprises, I think, in the marketplace by, I don't know, foreign powers that want to jerk around with cyber attacks. That would be the least surprising event of all. You'll notice that in channeling and overreaction, none of those are firing now because today's move off the bottom now made things no longer oversold. The big winners are still the non-tech plays like Nike, Dow Chemical, McDonald's, 3M, and Cat. There are still some good tech companies that are under max pain conditions like Apple and Microsoft. Then the energy sector is still overweighted here in the sell-off. There's XOP, oil, Halliburton, and Conoco, and Devon Energy as well. Today's price action generated a lot of dojis in the Dow, and there's still a couple channeling signals that are firing, like Walmart and Salesforce, Microsoft, which is also, that's a doji. It's channeling. It's number 5 on the MPRC. It's a 4.5 to 1. I think it was not one of the worst performers today. So that actually feels like a nice little recovery starting to develop there. Apple is nice because that is still 6 to 1, almost 7 to 1. And number 2 on the max pain range compression of 551W. We highlighted Apple as one of our high priorities from this weekend, and it returned a 3% bounce today. So that's good. So there's more room to the upside in Apple. Excuse me. Still not showing me. Damn it. Darn it. Sorry. Let's see. Nike was a breakout in all of the measured time frames, and so was McDonald's. We had talked about McDonald's as being pretty lucrative opportunity, and that one returned 3.3%. So I think there's more room to the upside. Only 3 dojis in the ETFs. They were more directional today. Lots of 551Ws though. That means they all had white candles today. And there's oil at 7.4 to 1. S&P Technology still offering a 6.7 to 1 on a retest of the 10-day high. That's got to be very attractive. Oil exploration, a little more tactical play, 4.6 to 1. Nothing is out of the river yet, so there's still plenty of room to the upside for that to go. Only Microsoft is out of the river to the downside. And I think Microsoft and Apple are both opportunities to buy quality on sale. Treasuries still very tightly pinched. And even though Caterpillar was slightly in the red today, I still think that's going to be a leader in the long run. Plenty on the auto framer because we are so far from the 10-day high, and the volatility today was small. So that all those dojis plus a long move to the 10-day high gives you a wide range of reward to risk ratios using standard framing. So what I do on these kinds of conditions, I just go through and look at the most liquid ones that I like a lot. So energy and XOP, I like treasuries. There's Walmart and Apple. There's the S&P itself in that condition. That's very positive, by the way. S&P Tech, Microsoft. So you can see there's a lot of good symbols that have high reward to risk ratios. So those all look favorable. And then you can see all of the framing data inside those if you're doing swing trading one day at a time. Then the daily squeezes, lots of good numbers better than 2 to 1. There's gold, silver, and Salesforce better than 3 to 1. Treasuries and tech, one day. These are all things that can pop one day moves. Apple's on that list. Honeywell's on that list. Those are all high price for one day big moves in my view. So lots of good ideas there. Being the MACD histogram and 4 seasons of MACD being dominated by fall and winter. Let me let that come up on your screen. So yeah, dominated by fall and winter. Just a couple things in the summer, and so these are the ones that are leading the way, have lost the least and are postured to make gains. Brazil and materials. You saw how many materials were good today. And there's Caterpillar in the summer, Disney in the summer. So those all look possible. Lots of good tech names that are still in the fall. That means they're above the zero line, haven't failed yet. And then these are the ones that have lost more and are below their zero line. So I would be looking more to exploit the summer and fall symbols right now than anything else. Looking at the multiple time frame NDX summary, and again, we sort that on the basis of the 10-period NDX, and Nike in great shape here, and Japan and Brazil, Mexico. XLB, the materials look pretty good today. And then secondarily, real estate, metals and mining, and emerging markets. The things that are suffering are all these that are still low on the 10-day NDX and bad on the 3-day NDX. So Chevron in the energy sector just getting murdered. And that's part of the whole energy complex is lagging. Energy, oil, and oil exploration. I still think there's a lot of room in here for the techs to make some rebounds. So if this is not the great sell-off, then here's a chance to buy techs on sale. So that's how I look at that. That's odd. Man, what happened to that report? I may have to reprint that and publish that again. It looks like some of that stuff got cut off. All right, but that should give us plenty of targets from that first half of the report, and this is still market condition, market calls right now, and that should be the area that we emphasize. Okay, let me try to get that thing reprinted and posted through Patreon again. But you have enough information on the first 10 pages to get all the trade frames that you need. Okay, so that's everything I want to cover for tonight. I want to relinquish the balance of the time there so that you can prepare.